now be starting the session. Good afternoon, everyone. It gives me immense pleasure to welcome you all to this special event. We are truly honored by your presence. The topic we'll be discussing in this session is titled Cashless Economy and Inclusion. And to help us, we have a panel of 5 people. First, we have Mohammad Nasir Salam, the CEO of Habib Bank Limited. Next to him, we have with us Nofal Daud, who is the Chief Digital Officer at the Bank of Punjab. Then we have Bilal Azhar Kayani, who is the Federal Finance Minister of State. After him, we have Dr. Ishrat Hussain, who is a renowned Pakistani economist, banker, and civil servant who served as the governor of the State of Bank of Pakistan. And finally, we have Sadaf Abid, the founder and the CEO of Circle Women Association, who is also the moderator of this panel. Please join me in giving a warm welcome to our speakers with a huge round of applause.
Good afternoon, everyone, and Assalamu alaikum. And I hope this is going to be an exciting 1-hour conversation because we've got a great panel with us. And it should serve as a masterclass on cashless economy and inclusion. I'm very honored to have particularly Dr. Ishrat with us, who's been a mentor and an advisor to me over the years. So I was researching on this topic over the last couple of days, and there's been such tremendous progress on cashless payments, digitization. It's the buzzword. Countries like Norway, Sweden, China, our neighbor India have really progressed with digital payments working not just in urban areas, but in third, fourth tier towns, small markets, street vendors, and low-income groups. However, Pakistan, we know cash still dominates our daily lives. Globally, 8 out of 10 adults have a formal financial account. Digital payments are a norm. In Pakistan, less than 1/3 adults have formal accounts. And as far as women are concerned, it's only 1/8. So we have a digital payment infrastructure like Rast, but it is dominated more by P2P payments and mostly transfers. So it's limited in terms of wider application. We know this, that digitization is core and it can lead to massive dividends for our economy, both in terms of economic growth, speed, lending, and also limiting corruption and leakages in the government system. We hope to draw on this panel today to look at how can we make digital payments work for all Pakistanis across gender, geography, and income levels. So I'll first request Nofal to add to this context, and then we will move further into discussion. So 3 to 4 minutes, please.
So in addition to this being a technical and a technological problem, it is also a problem in terms of risk management, because hamari economy mein cash is simply not just a means of exchange of value. Because of the structure of the economy in terms of income volatility, especially in the agriculture, MSME, and small-scale retail sector, the volatility of income also is a barrier in transition towards cashless. The latency risk in terms of the instantaneity of the transaction is another part. Trust factor is another part, and anonymity is another part. So all in all, while we have progressed a lot towards what we call as access innovation, inclusion in the last 5 to 10 years, the functional inclusion is where the challenge lies. Now, this is, in my opinion, the second attempt that our economy is making towards going towards digital and cashless. The first opportunity arose back in the late 2010s when the telcos started issuing digital wallets. Now that's been a great success story for all of us, except for the fact that this has not translated into those small-scale retail transactions as compared to the number of wallets that we have. The numbers are really impressive, but not backed up by the transaction volume and value. We missed that boat. Now is the second chance. So it's very important that a forum like this and the whole discussion takes advantage of the lessons learned. In Pakistan, the discussion on cashless and the holy grail of cashless is fundamentally the retail sector. And when I say the retail sector, it's the small scale retail sector because that's where the real friction is and that's where the real transition needs to happen. Our stats are not bad, by the way. In terms of accounts, जो अभी सदफ भी बता रही थी, we made good progress. I think our numbers are slightly more than what we've been quoted. Our accessibility in terms of wallets, in terms of accounts, in terms of mobile phones, all have increased. हमारा जो retail का sector है, उसमें value-based transaction are in the high 80 percentage points. But that still does not stop almost 20 to 30% of our money supply still being transacting into cash, and that's where the challenge lies. And that's where the basic argument or the basic thesis needs to be put in, that cashless doesn't just happen at the payments level only. It actually happens at the credit level. So when the transaction keeps on building in terms of payment to credit inclusivity, to payments and then credit inclusivity, that's where the real change starts to happen. And that's where I think as banks, we have to play a part and not, up till now, not been playing a part very well, but there are good signs. Why? Because we are biased towards collateral, static scoring methods, income seasonality नहीं होता. But the good news is, and I'm sure Sadaf, आप आगे जाके इस बारे में भी discuss करेंगी, कि the inclusion of credit in the cashless cycle is something which has already started to happen. Now that is transformative and inclusive in many senses. Gender inclusivity, income volatility को दूर करने के लिए, credit inclusivity के हवाले से it is very important. So at this point in time, I believe that we are at a very interesting juncture where all the efforts of all the parties are really aggressively happening in making cashless happen. But I believe that we have a chance to do it right this time. And if, unfortunately, isko hum na kar paye, then we would be missing the boat once again, like we did back in 2010s. Thank you for this time.
Thank you, Nofin. So, as you said, we're in this second attempt. And as I was using ChatGPT yesterday, it told me that Pakistan's cash in circulation is estimated at 34% of GDP, much higher than other countries who are pushing the cashless agenda. So I'd like to now move to Dr. Ishrat because he has really seen Pakistan's financial sector over several decades. And I think his lens would be very valuable and unique. So Dr. Ishrat, if you had to diagnose why Pakistan remains predominantly cash, and despite the digital rails and the reforms that we have undertaken, what do you see as some of the fundamental structural things that are missing or need to happen?
Thank you, Sadaf. Let me start by quoting two examples. One from China 15 years ago. I was driving down with my liaison officer and he asked the driver to stop by because he wanted to go from a food vendor, not a shop, but a food vendor, something to eat because he was hungry. And I saw him taking his mobile phone out and a QR code, and he just pushed the QR code against the vendor's receiver of the QR code, and the transaction was over. So I asked him, why was it? Because you didn't carry any money? He said, I don't have to carry money. I can carry out all my transactions from small to the large by QR codes. That is all I have. Last year, I had to replace my air conditioner, which were conked out. So I went to electronic market. Of those of you know Karachi, the huge market full of the branded, very high quality air conditioners. So I said, I want this brand, this specification. So we identified, I selected, and I took my credit card out, HPL credit card, and they said, we don't accept credit card. I said, what? You expect me to carry 3 lakhs of rupees in cash to pay you? He said कि जी आप ATM वहाँ लगा हुआ है. मैंने कहा ATM से मैं 3 लाख रुपए निकालूंगा. So I said I can't do this. So I went to the next shop, which is also a big shop, branded. I went to 3 or 4 shops and I couldn't get my air conditioner. So I had to ask then my driver next day to go to HPL, cash the check and pay that. These are the contrasts. What is happening in Pakistan? I go around the whole country talking to the business community, especially small and medium enterprises. And the reason why they avoid the digital payments is because of the fear of the tax. Their one and only consideration is कि साहब जिस रोज़ हमने ये काम शुरू कर दिया ना तो वो टैक्स इंस्पेक्टर आके हमें तंग करेगा, हमारी बिजनेस जो है वो ख़राब हो जाएगी, हम पैसे नहीं बना सकेंगे, हमने उसको पैसे देने पड़ेंगे. That is the number one reason why you are not. But that is only at the small and medium enterprises. It has to start from the large shops which are visible to everyone. And there, the government of Pakistan and the State Bank have to make it mandatory that up to certain limit, all transactions will have to be digital. And Easy Paisa and Jazz Cash have really done a wonderful job because 92% of all digital transactions today are taking place through these two agents network. So my request to the banks, and Bank of Punjab and HBL are very progressive banks, they should try to mimic as to what are the convenience points which are attracting people towards the wallets rather than to the banking transactions. They have a whole network. They are much stronger than, Mobile Bank or the Telenor Bank or others. That is my challenge. I've been saying to them that look at your processes, look at your cost structure. If you're even sacrificing some of your fees in order to entice, in order to give incentive to the shop in your big, accounts, do that. Because there's a cost of cash, and the government of Pakistan and the State Bank is bearing that cost. And I calculated when I was the State Bank that cost of designing, printing, distributing, and burning that is a huge cost, which is being borne by us. Why can't we substitute that cost by giving the incentives to the QR code and POS and e-commerce? And you do that, it will be convenient and you get the discounts and you get the rebates. And similarly, the tax authorities should give rebates and the tax credits to the people who have a digital network. Those are the kind of things which will. I'm glad that RAST has brought about 88% of the volume of transactions through this digital payment system. But only 28% is the value. So 82% of the 78% of the value of transactions is still cash or cash on delivery. In e-commerce, 65 to 70% are cash on delivery. In other countries, cash on delivery is only 25 or 30%, and digital and card payments are 78, 80%. And e-commerce is becoming very popular. So it is very good that RAST is now declared that by June 2026, all public sector payments, all challans, all fees, all taxes, all payments to the government, both way, one way the vendor payments as well as the payment receipts or the receipts to the government will all be digitalized. And once that happens, then there will be pressure on others also in order to be compatible with the government system to go towards digitalization. But my only hope is that banks like BOP and HPL, who are quite progressive banks, set the tone and set the standards and set the way forward for increasing the digitalization among their clients first. And then other banks will also catch up with this. And Pakistan, you have a herd instinct. One is successful, the others do follow. But somebody has to lead. And the short-term costs, I think, will become a longer-term returns. So this is what I feel is the way forward for digitalization.
I think you've used some, great metrics to get our attention focused, and I want to use your comment in terms of banks setting the tone and standard. And we have two very progressive banks over here, so I'd like to start with Nasir Saab. As HPL, how are you going to set the tone, and how are you already setting the tone and standards, and what is stopping banks from really playing a more proactive leadership role? What are the experiments, if any, that HBL is doing that you would like us to know about? And how are you learning from the experiences of the telcos and to really change the scenario dramatically in the next 3 to 5 years?
So thank you, Sadaf, and I think Naufal has set the stage in terms of some of the key items, and then Dr. Saab based on the expertise. When we come to the banking sector, I think if I talk about HPL specifically, today about 90% of all transactions that we do are digital versus manual. So when we start looking at the digital payments infrastructure, I think one of the things that we also have to look at is how the rest of the world, and Dr. Saab gave an example of China, how the rest of the world is evolving in these things. And one of the biggest things that strikes is the interoperability of the payment rails. And I think that is where, as HPL, we have, the mobile app, which now has all the transactions that take place. We do have our own wallet by the name of Connect that we offer, as well as white labeling it for, the Kisan card, for BISP, for others. So there is a whole slew that we are combined with. In addition to that, there is also the interbank fund transfer IBFT rails. There is also the central bank rails, the RTGS, or the real-time gross settlement system. So when you start combining all of these together with RAST, together with the merchants network, where you have all these POS machines, now you have QR coming in, which are really for the smaller merchants there. You've got a very, very interesting mix. When you look at the example of, for example, Kenya, which was the first one that started with M-Pesa, and you look at it today. So Safari.com, which basically manages the wallets, exists and is doing very, very well in a certain stream. And at the same time, the banks in Kenya are all doing very, very well. So I think over a period of time, we have to realize that one technology is not going to sweep and change the other pieces. The final critical element is today 50% of all wallets are pretty much inactive. And I think Naufal alluded to that, where we start talking about the value proposition. As far as the individuals are concerned, simply replacing cash with a digital tool doesn't really do it for them, because today there's no incentive to move. The cost, as Dr. Saab said, is being borne by the central bank, that huge cost of cash and movement. But as far as individuals are concerned, this is free. So if we really want to go to digital Pakistan, two things that banks are working on that I believe we need more support on. One is, doing the credit financing so that the value proposition and the benefit of doing these digital payments becomes more and more. So we've already covered the supply chains at the top end of the market. Now we need to be moving into agri, into the small farmers, into the micro SMEs, and that is where the industry is focused on. I think the support that we need is there has to be a war on cash. Technology itself is expensive. It does require investment in systems. It's not free. RAS, the only reason why it's free is that a foundation gave a grant, an international foundation gave a grant that is covering the expenses. So there has to be a disincentivization. Second is, I also sit on the board of Pakistan Business Council. And the issue is, if we keep on, more and more squeezing the documented sector, it gives an unfair advantage to the people that are avoiding digitization, formal economy, because simply they want to cut and not pay taxes. So clearly, putting the burden more on that sector is really going to result 5 years down the road in a proliferation of really uncompetitive institutions that are getting a 10, 20, 25% benefit. And that we see as a big issue that the industry, whether it's FMCG, whether it's, white goods and others, is facing. How do you compete with somebody that's really not paying their fair share of taxes? So I think there is a combination of what the banks will do on the digital side, on the credit lending side, to the segments that need it, but there has to be a look around, the structural pieces, and we're very fortunate that we have somebody representing, the government's view on this, and it would be interesting to understand those plans. But one is war on cash. Second is, how do we then move people into the formal sector that are currently working in the shadows?
Nofil, since we're talking about banks and banks' perspectives, as a leading bank in Punjab, Punjab's transition to cashless economy is critical for the success of Pakistan. So tell us more about BOP and the digital future that you as a bank are building. And, how do you accelerate and make digital cheaper and build on what Nasir has already explained to us?
Great. Thank you, Sadaf. So in Punjab, I
Focus on SMEs, agriculture, and low-income households, please.
absolutely. So just as a matter of fact, that's the three areas. So agri, MSME, and the low-cost housing being the three areas which are the pillars of a strategy. And in Punjab, I think what I was alluding to of learning from past mistakes and not repeating them reflected in our strategy in two ways. One, we understood that putting the credit piece as the central part of any digitalized cash ecosystem is going to prove very valuable. So that was one part. And the other part was, which I wanted to talk about, was the support of the government of Punjab in terms of not simply mandating certain types of transactions to be incentivized if done digitally, but also moving beyond that and putting money on the table by putting interest-free loans as well as partial credit loss guarantee kind of coverage, so that that credit piece then becomes palatable for a bank like us. So based on these two, what we have done in the last 2.5 or 3 years is to build a very large agriculture portfolio of small farmers where the average land holding is not more than 4.1 or 4.2 acres. The experience of onboarding that farmer is entirely digital. The numbers are very large, so close to 1 million farmers we have already onboarded, and this Rabi cycle, we have already extended loans of 100 billion rupees to these farmers, of which almost 6% are women farmer borrowers from this side. Interestingly, the other part of this chain, which is the spend part, is also completely digital. So we've also established a network of close to 5,500 merchants across Punjab who are now equipped with mobile POSs, where these farmers are now purchasing agriculture input completely digitally, and those merchants are also doing documented transactions. So, Dr. Shah, very interestingly, the behavior which is emerging from this one single portfolio is enlightening us that A, our first assumption or thought that the technology piece would not be handled by either the small farmer or that merchant who is sitting, let's say, in a remote tehsil of Laiya or Rahim Yar Khan, has proven us wrong in both counts. So now we are in a third cycle where very comfortably both the farmers are using those digital products as well as the merchants are using that. So that's one example in form of Kisan card where we have done that. On the MSME side, we've gone ahead, in fact, slightly more aggressively. And we have built a portfolio under the Asan Karobar card product of 100,000 plus MSME with an average loan size of 400,000. It's a clean loan. The overall portfolio is in excess of 40 billion. And the interesting thing is that we never meet the customer while onboarding. So again, the rails are not just digital. They are so convenient that the customer, I mean, I have a favorite line saying that if some woman wants to purchase a few Silai machines in Bhakar, and she comes to know that there is a scheme in which she can apply, all she has to do is to go on a portal and apply and put some basic information, and that's just about it. So that part is there as well. So that's the intervention on the MSME side. On the low-cost housing, we have facilitated in creating a portfolio of more than 120,000 houses, working with the government of Punjab again under Apni Chhat Apna Ghar, where we are working with MFIs and extending small loans of cap of 1.5 million rupees to people who own 5 mallas in urban areas or up to 10 mallas in rural areas. And that also has happened in the last 2.5 years. One thing I would just like to add for all such things, that the speed to market and the level and the economy of scale we've been able to do simply because the rails were completely digital. So we had to rethink the whole process and then work with our stakeholders, which is the other very, very big important point, that banks in today's ecosystem cannot work alone. We, and I'm sure other banks, also works with their ecosystem partners, be them, for example, as Nasir was saying, we work extensively with Connect and leverage banks, HBL's network for serving our customers. We work with our fintech partners. We work with other aggregators and so on and so forth. The whole open banking, API-based open banking is really giving us a lot of leverage in creating those use cases. Final point, of these very large 1.2, 1.3 million credit customers, now we are already sifting through them and graduating these borrowers into standalone customers of our bank without the intervention of Government of Punjab as well, which is the next logical graduation step for such customers. So again, the chain from simply payments to graduating towards a credit use case and then going towards a full-fledged banking customer, we've already started seeing happening in the last 3 years.
Thank you. And I think it's fascinating to see your journey. And if we now move, as you said, we're seeing the movement from payments to credit use to becoming a full banking client. And it would be terrific to see how we convert these 1.2 million into 10 million farmers who have access. So for a country like Pakistan, scale becomes very critical. So let's move our conversation to Bilal. So Bilal, we've heard about, Dr. Ishrat also spoke about it, that the government has committed that all payments will be going digital by mid-2026. So we have that mandate. The Prime Minister, Shehbaz Sharif, has also, constituted a working group and a commitment to going digital. Pakistan is late, but there are lessons, and the next 3 years can be very exciting for us. So as I was reading on why countries made progress, I learned that it is not just a technology play. It is also about behavioral shifts, which are very critical. So globally, behavior change was really as important as the infrastructure and investment. Brazil used PIX campaigns to get the population excited. India ran national level systematic messages, plus combined it with UPI literary drives. China normalized QR payments and at a street level. So what is Pakistan's strategy? To build trust, to enhance digital literacy, because we do live in a country with one of the widest digital gender divides. What this means is that a woman in Pakistan is constrained in terms of owning a smartphone and its usage by male members in the family. So, and we have the issue of where women don't have their own SIMs. So what is Pakistan's strategy to build trust, to build digital literacy at scale, and to ensure that the women, rural communities, and informal merchants also take advantage of this movement?
Thank you very much, Sadaf Sahiba, and I'm grateful to ThinkFest for this opportunity, and I think it's very important that we speak about this topic frequently. And I'm also grateful for the opportunity of having heard Dr. Ishrat Saab, Nasir Saab, Naufal Saab before I got the opportunity, because it allows me to really lay out exactly what the government is already doing. And whilst I lay that out, I'll also attempt to address the very genuine and legitimate points that have been raised by the speakers who have spoken before me. So the first thing I want to highlight is that you mentioned a working group. It's basically a steering committee on the Cashless Pakistan initiative, which the Prime Minister chairs himself. And I am a member of it, as are other government colleagues and regulators like State Bank. But in addition to that, we also have private sector representation. Zafar Masood Saab, who couldn't be here today, in his capacity as President PBA, is a member of it. Amir Ibrahim from Jazz, Jan Zaib Khan from Easy Paisa, Atif Bajwa Saab, Al Falah, they're all there. And the Prime Minister chairs this meeting every 2 weeks. And he's delegated the responsibility to me of having to coordinate it all before the meeting committee is before the main committee's meeting is held. And as a result, we have a discussion once or twice every fortnight with all of these colleagues from the private sector, including Jazz, including the banking sector, where we speak specifically about these very issues. We have these debates, and what we have done is that initially in the steering committee, a path was charted in consultation with everyone, and then targets have been locked. And broadly, the cashless initiative is focused on 3 areas. The first is digital payments adoption, primarily. The second is digital public infrastructure. And the third that you've also mentioned is government payments digitization. And each of these has a clear owner in the government. The digital payments innovation and adoption pillar is housed primarily at the State Bank. Digital public infrastructure is the IT ministry, and government payments digitization is led by the finance ministry. And our job is to bring all of this together. On digital payments adoption, for example, after debates internally with all of these people, we've set very clear targets for this fiscal year and till December 2026. So I'll give you one example. 500,000 merchants were using QR codes or offering digital payments in the country, according to State Bank figures. The target is to make sure that number hits 2 million by June 2026. We've already made progress up until November. The last number I had seen that had been reported by State Bank in this committee was 0.76 million. So that's a 50% increase. We want that to quicken up, and we want that to hit 2 million by June. Similarly, we have targets for digital banking users, which were 95 million as of June 2025. And the aim was to have it hit 120 million by June 2024. The number was 95 million. And we wanted it to, June 2025, the number was 95 million. And June 2026, we wanted it to hit 120. But according to the State Bank, we've already beaten that number. Similarly, we have targets for digital banking transactions. So we have a very clear set of targets and a clear set of measures as well. But before I come to that, I'll briefly mention the other two pillars. We realize that in order for us to achieve all of these targets, and in the long term for the economy to truly be digital and cashless, you need a very robust, reliable digital public infrastructure. I think the upcoming 5G auction will play a critical role in that. One impediment in the proliferation of digital public infrastructure was the right-of-way charges. The government has removed all right-of-way charges. As part of this cashless initiative, this discussion came up during the committee meeting, and the Prime Minister decided that all right-of-way charges should be removed. And the primary two agencies, National Highway Authority, which manages all the highways and motorways, and Pakistan Railways have already removed all right-of-way charges. In order to facilitate that, we are working with the provincial governments to also achieve the same. Thirdly, on the government payments digitization, Dr. Saab mentioned the June 2026 target. That is true for all centralized entities of all governments, and by that I mean federal and provincial. The aim is to digitize all government payments. And if you look at the broader government, which includes SOEs and autonomous bodies, the aim is to digitize all government payments by December 2026. What that would mean is that every payment made by a government or a government department or entity by December 2026 will only be made digitally, not through check, not through cash. That means that if you're a pensioner, if you're an employee, if you are a vendor who has provided services to the government, you will only be paid digitally, not partially digitally, but digitally. Someone at the government entity presses the button, it hits your account, you don't visit an office. The second element of government payment digitization is the P2G element, which is the citizens or the persons paying the government. There, what we have aimed to do is that by December 2026, the citizen or the person should have the option of paying digitally at each and every government entity. So whilst we are not completely removing cash, but it is mandated, it will be mandatory, and every government entity across all provincial and federal governments will ensure that every citizen or vendor can pay digitally wherever they want. Already, you will see if you go home now, on your gas bills, on your electricity bills, QR codes have been printed, and citizens have the choice of paying through QR code. In addition to that, and retail was mentioned, and Dr. Ishad rightly cited two examples right at the start. And it is a bit of a carrot and stick, which will be required. The carrot is definitely, and I totally agree, and that's part of a larger discussion, which I also think will be discussed when I move to my next panel on economic growth. But definitely, I think that there is a Laffer curve and there is a tax rate that is optimal for the economy. And the way you go about documenting the economy and the facilitation you create for the documented sector plays an important role in the offtake of whatever initiatives you want for people to come into the documented sector. But in addition to that, one other thing that we are doing is we are moving towards making it mandatory for all retail outlets in the country to offer digital payments, to offer at least one digital payment option, either payment through cards or payment through QR codes. Executive orders to this effect have already been issued by the federal government for Islamabad and by all provincial governments in order to immediately start implementing this, because when we had that debate internally, we realized that the only entity that would really be able to ensure implementation of this on the ground is the entity that has administrative clout across districts, and that would be the provincial government and the local governments. So an executive order has already been issued. In order to start rolling out, it has been made mandatory for retailers to have one mode of digital payments, at least one mode of digital payments available. We are also working on legislation to the same effect. So the State Bank Electronic Funds Transfer Act has already been amended in order to include QR codes as one digital payment mode. And now we are working with the provincial governments to have a harmonized set of laws across the country where it is made mandatory for retailers to offer at least one payment option on a digital mode. I'll state two important facts very quickly, and then I'll conclude, and I realize you'll want to move towards Q&A. One, mandating it is one element. How do you then facilitate it? And so in order to incentivize QR codes, the government has this year set aside a 3.5 billion rupee subsidy for MDRs, which are the charges associated with QR codes, which will enable 0.5% of the charges to be picked up by the government. That the estimates we heard from the banking sector and from Easy Paisa, Jazz Cash, and PBA during the discussions were that at the lowest that they could afford was 0.75%, going up to 1%. So the government has committed to picking up 0.5%. This subsidy is operationalized. It's there. It's being used. So we hope that this will enable the pickup of QR codes. And I think some of the financial literacy challenges that you mentioned, I think the private sector will play a leading role, because when they have this incentive and when they start chasing customers, I think that they do a better job than the government at times at marketing and delivering that message. One last point, before I conclude, and I think it's an important point. As part of the government payments digitization initiative, where if my memory serves me correctly and I'm not getting the order wrong, I think P2G payments are 24 trillion last year across all governments, and G2P was 17 trillion, 16.5 and 23.5 respectively, to be precise. One major element of government-to-person payments is the Benazir Income Support Program, where you know that there are 10 million beneficiaries who are all getting a 13,500 rupee stipend on a quarterly basis. That amounts to 590 billion rupees a year right now. The overall budget of the Benazir Income Support Program is 716 billion, of which 590 billion is this direct cash transfer program. The government is digitizing all of it. Of the 10 million beneficiaries, 7 million beneficiaries have already been issued SIMs. And what that means is, currently, when you transfer the amount to them, they get a code, they go to an agent who cuts their administrative fee, and they get a set of cash. We are converting all of this into social protection wallets for each of the beneficiaries. These SIMs have been issued for that, so that in terms of women empowerment and empowering the lowest income classes, 10 million beneficiaries of BISP by March will have operational social protection wallets. And by June 2026, each and every disbursement made to them will be made into this wallet. That will enable them to have both in terms of financial inclusion, having a bank account, and having an amount that immediately hits their account. The next question we heard was, well, these women, they get a reason generally to go out of the home in order to take this cash. They will still have that option, because all that's happening is that they have a bank account where they get money which is in their account. But they will still have the option of going out to any agent in order to be able to withdraw that money in cash. And secondly, we are working to ensure that there's interoperability, as was mentioned, which is vital, so that the person who is receiving the money is not dependent just on branches of their banks or ATM machines of their banks or agents of whichever wallet they have. They're able to go to the closest facility available and withdraw that. So all of these initiatives are ongoing. It's very central to what the government is doing on the economic front. And with sessions and guidance like these, we'll continue to improve that effort. Thank you.
Thank you so much, Bilal, for outlining the series of initiatives that the government is undertaking. And for Pakistan, this is definitely very critical, because we know this, that when we go fully digital, it will easily add 3 to 4% to our GDP, and Pakistan really needs that. So wishing you all the best, and I hope that at the next festival, ThinkFest, we can have you to report back on these metrics. And I think that would be great for us to take stock together. Dr. Ishrat, before I open up to the audience for questions, I know you're a big proponent of women's economic empowerment, and you've been involved in microfinance, economic reforms. How should Pakistan be really thinking about inclusion? Because we know this from examples of India, Brazil, Kenya. It all happened when women also became a big part of the digitization drive. So, what would be some of your key recommendations, takeaways, insights on this theme?
Thank you, Sadaf. It's now quite well known that the countries which do not allow economic opportunities in form of labor force participation to their women will always be constrained and will be at the lower bound of GDP growth as compared to their potential. And Pakistan is a very good example. In my book, Development Pathways, India, Pakistan, Bangladesh, 1947-2022, what has been the distinguishing feature of Bangladesh's progress, both on economic as well as social indicators. And remember, Bangladesh was way behind us in 1990. And today, Bangladesh is way ahead of us in 2025, was the female labor force participation rate, which empowered women with financial independence, the Grameen Bank's microcredit banking operations, and the NGO's social investments in schools and health facilities all over the rural areas. So this combination of higher enrollment rate of the females, the higher participation rate in the labor force, the better access to opportunities like the microcredit and the social investment. This is now the recipe which Pakistan has to follow. We have a lower female labor force participation rate. And I know that we have worked together. The microfinance has not actually reached that stage where it is a breakthrough for the female labor force participation as far as economic opportunities are concerned. And mainly, we are still concentrating on the non-poor areas like Karachi, Lahore, Islamabad, and Faisalabad and others, and we are not going to the areas where the actual poverty incidence is very high among the females, which is the Balochistan, the rural Sindh, the southern Punjab, the merged districts of the KP. Unless the microcredit goes there, I do not think that our female participation will increase. Finally, I think there is a social barrier in Pakistan. I have had the opportunity of employing young women through comparative process in the State Bank of Pakistan, and I can tell you they were the top of the line as far as performance was concerned, much better than males. And I introduced, the daycare center for them so that even the younger mothers can come and continue to work in the State Bank and also take care of their children by lunchtime or tea break or others, and professionally run that. And that retained the females. And the productivity of the State Bank, the efficiency, was really enhanced. Then I was at IBA where we were actually recruiting the best talent in Pakistan. But in the dean's list, out of the 10 places, 8 to 9 every semester were won by the women, by the females. But the tragedy was that when it came to graduation, and they were having very high GPA, lots of them were not joining the labor force. We are wasting such a precious asset for almost nothing, because the mothers-in-law say कि हमारी बहू तो घर पे काम करेगी, ये नौकरी नहीं करेगी. I think we have a mother-in-law problem which we have to start addressing. Unless you do that, I think we will remain much behind the other countries and we will not be able to progress.
And I think while we may have a mother-in-law problem, but the father-in-laws can also play a very positive role. And we do need men as allies and men as partners, which is what you're talking about. So I think for Pakistan's progress, men must join hands. And to all the men sitting in the audience here, the women in your lives, you must encourage them, because it is that encouragement that in that lies Pakistan's future and prosperity. Pakistan has only 24% women in the formal economy. Bangladesh has 40%, Vietnam 70%. As Dr. Ishrat mentioned, no nation in the world has progressed without women's economic inclusion, and we are behind on that. I'd love to open up to the audience. So audience, please ask a question, give your name, organization, and make sure it's a question.
Hi, can you guys hear me?
Yes.
So, Assalamu alaikum everyone. So I have a question. Ma'am, my name is Ismail, and currently I'm running my own startup, digital startup in Pakistan, and where I'm catering multiple clients all over in America, all right? And also I'm catering some clients in UK. So my question is, like, we are facing a lot of issue when it comes to remittance part, like when it comes to PayPal, or when it comes to, the payment process in Pakistan, right? And we can see that like when it comes to process, when it comes to getting the payment gateways, we have to suffer a lot, right? And we are like listening from this from last like 3 years or 4 years, like we are getting PayPal in Pakistan, and there'll be a proper process in Pakistan. What kind of measures we really need to bring PayPal in Pakistan?
Thank
Number
you.
one. And number two is probably in IT industry, like we have catered like $3.4 billion international remittance in Pakistan as a freelancers, as a marketing agencies, as IT startups, as a software house. We are like doing our best to bring remittance. So what sort of what's your process? Like what's the thought process when it comes to start like how we can implement short-term progress to long-term progress in Pakistan to bring a remittance in Pakistan through a proper structured way. Yeah,
Great.
thanks.
Thank you. Thank you. So we'll take maybe one more question and then we can go to the panelists. Okay, so let's hear from the gentleman there.
So I'm Ahmed. I work for Mashrik Bank for their SME credit financing operations. And one thing I'd like to highlight is and ask a question to the panelists. They're open to answer any one of them.
Quick question, please.
Yeah. So why does the government not cultivate an ecosystem where they actually do not work as closely with the banks and also include the end users, which are like the SME merchants or the end users that are in the impoverished areas, or even in Lahore, Karachi, Islamabad, where those merchants are not intimidated and are not given deadlines, or you should, they'll give deadlines
Okay.
to you should be
Thank
having
you.
digital payments.
Thank
or-
you. Okay.
May I have a question?
Yes.
So my name is Umar Farooq. I am currently a student of economics, and my question to the panel would be that what's the future of microfinance and digital banking in its whole, like the digital apps that do not physically exist as a bank? How saturated the market is currently? What the panel's thoughts about that? And I, as a future entrepreneur, inshallah. So if I want to come into that market and I want to open my own microfinance bank, what would the panel advise me to do? Thank you.
Okay, great. So, Nofil, you could take the first question and then
Sure. So, आपका सवाल था. So
we only have about 3-4
yeah,
minutes.
excellent things already happened. I encourage you to look it up for the freelancers as well as Pakistani export software exporters. The State Bank in the last 2 years has done a tremendous amount of work. So, for example, we have a product which all banks do. It's called a freelancer data account, which there are no charges, and most importantly, you can retain 50%, up to 50% of your inward remittance in dollars. You can get a USD debit card to take care of your cross-border expenses. It's not 100%, but it used to be zero earlier. So a lot of leeway happening. I think the final piece is about taxation. I think that also is taken care of. 1% is the full and final taxation. So I think in the last 2 years, both the State Bank as well as the federal government have take steps to encourage the inward remittances of software exports major way.
I'll just add a little bit to Naufel's comments. One is the things that we've already done, and I think those help. But there is obviously a lot of friction when international payments are coming from around the world that correspondent banks and others charge. And I'm not sure that PayPal just coming in and setting up is really going to change those. I think what the government of Pakistan is doing together with the central bank in terms of looking at stable coin and looking at how we do instant payments is going to certainly help take this forward in a more frictionless manner than it is currently. But to Nofel's point, the central bank has done many things that he's outlined, that really provide really good value to freelancers and others. I think banks need to publicize that more. I don't think it's well understood.
Entrepreneur, I think you've got to have a stomach to fail, zoom into a challenge that needs to be solved, that people are willing to pay for, and have a great group of mentors and advisors that you can keep refining your idea with. I'd like to now end by requesting our panel to think about one idea or one reform that you would urge the ecosystem, the government, the banks, whoever are the players, to take action on, which can accelerate our efforts on digitization and cashless payments inclusion. So one sentence, one word, takeaway that you want to zoom into, that you think has the ability to make Pakistan leapfrog on its cashless agenda and inclusion.
So it's not one. It's embed credit in the payments, embed innovation, as well as enforcement on part of the government of certain items. These are the three things I can recommend.
I think I'll do a quick one, carrot and stick. So do all these incentives that Naufal has said, but war on cash, unless we address it, whether it is the large value notes, whether it is, the large cash transaction where there's really no economic reason for people to be withdrawing as much. Unless we put actions around that, we're just going to unnecessarily lengthen our digital adoption journey.
I think I'm the recipient of input in this question. So, but nonetheless, I will say one thing. War on cash, I will be a bit, I agree with the concept and principle. The only reason I'll be a bit conscious and cautious is that I think we will have to make sure the sequencing is right, especially in parts of the country where there isn't as much optionality or empowerment. So you can only remove cash when you've really given the citizen all the tools to have the alternative, right? And so I think for big business, totally agreed. And I think one example I'll give very quickly is that I think for transactions beyond 200,000 rupees, I can't remember the exact figure, it's already in the income tax ordinance in the budget that was presented last year and stands approved, where there is a disallowance of a certain portion of expenses for businesses. Yes, but it's a start. And similarly, as you know, if you go to a restaurant right now, if you pay by card, you pay less a GST. But more of this, and I think all of the incentives and the enforcement will obviously go hand in hand. One thing I will say very quickly to the gentleman there, who seems to be an aspiring digital bank entrepreneur. I think the State Bank has, in principle, issued 5 licenses. I think 2 have been operationalized, Easy Paisa and Mashriq Bank. One thing I will say on Mashriq Bank is, and I think this is to the State Bank's credit, that Abdulaziz Al Ghurair, when he visited, he mentioned to us that the entire process from concept to operations took them less than a year, which could take up several years in other countries, and they were really appreciative of this. And the second thing is that not only have they opened up digital banking operations, they've also moved their corporate global middle office to Pakistan, resulting in 450 new jobs, of which 40% plus are women, working from home across the country, including small cities. So I think that the State Bank is the right place if you're looking for that. And I would suggest to the gentleman that he looks at the data and the case studies of the 5 banks that have either gone through this process or are going through this process. And if you're more interested in more details, we can certainly help and connect you to the State Bank on that front.
Dr. Ishrat, please.
I think time is up. I would only say my challenge is to the commercial banks to increase their penetration ratio as far as the digital world is concerned, because they have the clout, they have the networks, they have the competence. So I expect them to take the lead rather than, easy pesa and jazz cash dominating the market.
Great, great. So, in summary, innovation, carrot stick approach, sequencing, banks penetrating into more, geographies, going deeper, not just relying on the telcos. And I'd add to that that digital inclusion for women is not a welfare question. It's a market expansion and productivity, prosperity dividend for Pakistan. And rather than war on cash, I would rather like to come up with something like peace on cashless or prosperity through cashless, because war carries a certain energy with it. I think, yes, but war carries a similar negative. Words we use carry certain energy. So I love the idea, but reframing it maybe. But thank you, audience. Thank you for being here. Thank you for giving us your attention. And thank you to the panelists. A big hand for everyone. It's great being here.